Hi guys, this is Wave618. It's the 23rd of April 2018. We've just gone 8 PM BST. Alright, so we're just looking at Bitcoin here on the 4-hourly chart. Now, a few things to discuss in this video. So first of all, we're going to break down, I'll tell you what we're going to discuss all together first. So we've got the futures expiry coming up on Friday, so that often causes a little bit of volatility. So I'll go into that. I'll explain a little bit about the futures expiries, and that's one thing we'll discuss. Another thing is we broke the trend line on the log chart. So if we just quickly pull up the log chart, drawing a line down there, connecting the highs, you can see that we were waiting to see if this line would break. I did suggest it was going to break. I was saying that it might pull back before breaking, but in fact it just broke straight through it. Okay, and very often you do see once the line has been tested a couple of times, the next time it does become weaker. Yeah, so once it's tested 3 or 4 times, you often see a break. Also in this video I'm going to discuss something about exponential moving averages, and I can pretty much guarantee you won't have heard of the way I apply them anywhere else. I'm pretty sure you won't have seen the techniques that I've been using anywhere else. So it'll be very interesting for you, and something that you can use for further analysis in the future. But so that's another thing we'll be discussing in this video. Alright, now clearly we've broken this line, so we're going to come off the log chart. I'm going to delete that line and back on our linear chart. Okay, so as I've discussed, there is a potential bullish scenario in this being a neutral triangle, which is what I've been discussing in previous videos. However, it's not my primary count. A neutral triangle would look as follows: A, B, C, D, E, and obviously it doesn't look triangular. The point being is C is the longest leg, so obviously that completely distorts any potential triangle. But it is another significant Elliott wave pattern. It's one that not many people know about. It's and it comes under what's known as neo wave, which is a type of Elliott wave designed by Glenn Neely. So I won't go into that. I've discussed it in previous videos, but that's the possible end to the bearish correction, and from here we could see a move upwards. It's not my primary count. I do expect prices to come lower, and actually what I see this as being a Wyckoff zone right here between these two lines. So this being the upper zone of the trading range, and this being the lower trading range for the accumulation phase. So what's happening here? The smart money is buying. Now, just because it's buying, it doesn't mean price can't come down lower. Often before prices go up, you will see a test, which is where price comes down lower on low volume to see who's left in the market, to see if anyone's still shorting, and also allows the smart money to buy in at cheap prices. Now, it's important with Wyckoff that we look at volume, so just putting volume on the chart. So if this is our accumulation phase, this would be what's referred to our selling climax. Selling climax always occurs on very high volume, and we saw that big spike there. Following that, we get what's known as a automatic rally, and from the automatic rally you get a test of where your upper horizontal line of the trading range will end. So since then we've come back down, and we're just creating a trading range picture here. Price failed to come down below the previous selling climax, and I expect us to retest this upper trend line. It's not guaranteed, it may fall short, that often happens, but the point being is I see price coming down lower. I'm looking at a price of at least 4,300. Reason being, if we quickly go on the daily chart, I'm going to explain a few reasons for it, but this is one I'll quickly just mention now. So it's the 78.6 retracement, that 4,300 level. As I've mentioned previously, whenever Bitcoin has made these 5 aggressive waves up, it's always retraced at least 78.6%. So this is a preliminary target for where I see Bitcoin coming down to, back on our 4 hourly. So as I say, this would be our trading range. I'm happy for it to come up to here, could even come up to 12,000, because if it is to come up to here, based on Elliott wave, it could be a running flat. So if this is our, okay, first of all, let's just draw the whole Elliott wave pattern that could develop. So that's our W, X would finish here, and then Y would come down to test this 4,300 level. Now our X wave in itself would be an ABC pattern. So this being A, this being B, and this being C. So these types of patterns we refer to as a flat. Now with a flat, you generally get 3 waves up, 3 waves down, and then you get 5 waves up. Yeah, the last leg is actually impulsive, and I'm struggling to see how that is actually going to work out here. Because I actually see 5 legs up already, and if this is just a wave 1, that's pretty high for a wave 1 if this is going to be the end. So I'm struggling to see at the moment, but we'll have to see with further price action to see how that's going to develop. But potentially we could see a running flat where typically A is equal to C. So if A came up to this point here, B came down to here, so C could come up to this 12,200 level. Yeah, and that would form what's known as a running flat. So I'd be happy for it to come up to here. If it goes up past here, I'd be getting quite concerned and thinking it's actually looking a lot more bullish at that stage. Yeah, so that 12,200 level is key, and I would not be surprised if this upper trading range gets tested again. However, I wouldn't be surprised if it rolls over sooner, just because I'm seeing this 5 waves up already, and yeah, it's true. Basically, if C needs to be 5 waves, and I'm struggling to see if we already have the 5 waves up. If that's a wave 1, 2, you could have a 3 up to here, 4, and then a blunted, a truncated wave 5. That could happen. So that's one possibility. And we are going to have some increased volatility coming in towards the end of the week on Friday of this week, where we have the futures expiry. So that's one way in which it could play out. It's not something I'm really going to trade, to be honest, just because it could roll over. It doesn't have to come up higher. With the Wyckoff zone, often you get different levels of where the trading range comes up to. So it doesn't have to hit the same highs each time. And then, yeah, as I say, I expect price to turn over, come down lower, looking at these 4,300 levels. So I'll give another reason for why I'm expecting 4,300, and you'll be really interested to see why. It's using exponential moving averages, and it's in an unconventional way that I'm pretty sure you would never have seen them used before. Before we get on to that, just want to show you quickly of doing a little bit of a study, really, looking at, I'll explain it in a moment. So let's just go on the daily chart and zoom in a little bit. What I've basically done, these rectangles, what they indicate, so each one is 7 days long, and essentially what it's showing is the CME, sorry, the futures open and close. So the futures open on a Sunday evening, what is it? I think it's 11 PM BST, and that would be 6 PM Eastern time. So, and then they close on Friday, which is essentially, what time is it on Friday? So I think it's 5 PM Eastern and 10 PM BST. So essentially it's Monday to Friday. You've got your futures exchange that is open on the Globex, and on Saturday and Sunday, that's where you get you're trading outside of the futures exchange. So it's more the retail traders, whilst the big money is trading during the week. So basically I was doing a bit of a study. Basically the green labels are actually where the CME opens, and so the futures exchange opens, and the red labels are where the futures exchange closes. So I was looking to see if there's any correlation really between what happens inside the futures opening hours and outside. I'm still studying it, to be honest, not noticed any obvious pattern so far, but I'm going to have a closer look and I'll definitely update you if I notice anything. You can see a couple of the blocks have been shaded blue, and this is where the futures contract has expired. So this is always the last Friday of every month. So this coming Friday will be the last Friday of April, and that's Friday the 27th. And you can often see a lot of volatility just prior to the close, and sometimes afterwards as well. So yeah, as you can see here, there was a big sell-off just prior to the close. Here again, another sell-off prior to the close. Here it was pretty flat, and actually but yeah, following that flat phase, it crashed quite suddenly afterwards. So in and around the close of the futures, you can see some volatility. There would have been a futures close at this time also. However, obviously, futures only came into existence on Bitcoin on the 17th of December 2017, which is actually the high of Bitcoin. So far from coincidental. Basically, the futures exchange allowed for large short positions to be placed in Bitcoin. So it's conveniently opened at that time so the smart money could short Bitcoin. And that's what we've seen. And trust me, they're going to milk this move as much as they can. They're going to bring prices down as far as they can. So I don't think it's over yet. I'm expecting prices to at least come down to 4,300. Another thing you can see from these rectangles that I've drawn, can you see how the height of the rectangles is diminishing? So they're becoming shorter and shorter in stature, which suggests there's decreased volatility. That decreased volatility suggests we're entering a Wyckoff trading range. So around here, this is typical for a Wyckoff trading range. Decreased volatility, decreased volume. The market becomes very, very quiet. And essentially, it's the smart money slowly accumulating their positions. Yeah, so obviously, this is one way to look at volatility. Another way is just looking at the ATR. So here you can see a steady decline. This stands for the average true range. So that's the range is essentially the candle highs and close. The difference between the high and the close. So the difference between the high and the close has been gradually diminishing, and that's because there's reduced volatility, reduced action in the markets. So yeah, and just zooming in to see what has happened on the hourly chart now. So this is our futures open and close here. So there is some interesting things that you find just before the close. So you can see it opened at around this $8,338 level. And just prior to it, it was looking like, the close of any market is always significant to determine whether the participants in the market are bullish or bearish. So at this point, there was a lot of indecision. And then suddenly you see price getting marked up, yeah? And it managed to close above the open. And you can see after that happened, price shot up, yeah? It's because people are aware that a close above the previous open suggests that the market is bullish, and this has happened after quite a lot of consolidation, a big flat phase here. There was a show of strength here, big candle, big green candle. So it's showing to people that there's, the buyers are taking over at this stage. And so when the market, the futures exchange closed higher than the open, it reassured a lot of people, and that they went long. But these longs, I don't see them going on for too long. As I say, I expect maximum 12,100 before it rolls over, and certainly it could roll over sooner than that. Okay, let's just come off that now, and back to our regular Bitcoin chart. So another few interesting things. So this has actually retraced 50% of the previous high low. So that's why we're finding a bit of resistance there. So as you can see, 50% has been hit very nicely. And just zooming in now, I mentioned how it looks like it's made 5 waves up. I'm going to show you using Elliott wave Fibonacci ratios how those 5 waves have been formed. So let's go in on the, I think we can go on 15 minutes. Okay. So this was where I said it finished. Obviously this was the low, but because this was 3 legs up, it looks corrective, and so it looks like this was a truncated final wave down, failing to come below the low here. And so any count upwards, I'd start it from here. Yeah, I wouldn't start it from here because this is 3 waves up, and any change in trend should be 5 waves up. So, so if this is our wave 1, 2, as I said, we're going to use Fibonacci to confirm these levels. So this is our wave 1, 2 came down to here. So 3 hit the 2.618 fib, and if we, so this was our wave 1 fib extension here, and if we bring that to where wave 5 would have started, which is here, because this is our wave 4, you can see wave 5 has finished around the 1.618 level. That's if it has finished, yeah? So that's why we're seeing a bit of resistance here. You can see prices flattening out. Whether this is distribution and it's going to roll over, we'll soon see. You can see diminishing volume here. It's going to make a decision very soon. And yeah, so that's using fibs to count these 5 waves up. Another way to confirm, another way to show that this is a wave 5 finish is if we use, often if you do a fib extension from wave 0 up to wave 3 and extend that from the beginning of wave 5, you can see almost bang on it's hit the 0.618. Alright, so a few reasons for why that could be 5 waves finished right there. And also, as I showed you on a larger time frame, the 4-hourly, this move has actually retraced 50% of this move down. So a few reasons for resistance there. So we could expect a bit of a retracement, a 3-legged pattern down. That in itself may, if we go on the log chart, it may just retest our downtrending log line. So let's just quickly draw that. So it could come down, retest this line. It is pretty close to where price is now at the moment, so I don't know if it's going to come below this line. Obviously this line has been breached, so it's no longer, but once it's breached it often acts as support rather than, you know, it's no longer resistance, and so it then usually becomes support. The line gets tested and then moves back up. However, that would be quite a shallow wave 2 retracement if it only came down to here. So we'll have to see. We're going to have to wait for more information on that. We need to see more price action to decide how to count these waves. Okay, so I did mention, I'm going to mention something that I'm sure is going to be of interest to you now. Now, alright, I think we can go straight into it. So we're on the 4-hourly, and what I'm going to show you is some exponential moving averages. And here they are, okay? So you can see the figures that I'm using are very high, yeah? And you're probably wondering, where the hell have I got these numbers from, yeah? Well, some of you might have realized straight away, I'm not sure. But essentially these are Fibonacci numbers, okay? And the way we calculate our fib numbers is, so there's a sequence. I'm not going to go through the whole sequence, but essentially the way we calculate the next number in the sequence is we can either add the 2 preceding numbers together to get the next number, or we can just times any number, any fib number by 1.618, and you will get the next fib number. So for example, let's take our 144, bring up our calculator here, 144, times that by 1.618, and you get your 233. Again, another 1.618 multiplication brings us to 377. Next one 610. Next one 987. next one 1597, next one 2584, next one 4180, and then 67. You can see the numbers are slightly distorted here to what I've got. This is 6765, here it comes out 6763. The more accurate way is to actually add the two preceding numbers, and that's how I've worked out these. This EMA 10,000, ignore that one, that can be taken off. It won't let me go above 10,000. Basically I typed in something, the next fib number which is higher than 10,000, and it rounded it off at 10,000, so we can take that one off, it's insignificant. Now, why are these levels significant? Because they're getting hit, that is why. So this is basically the way I've drawn them. You'll see a thin line and a thick line for each colour. Essentially, the lower of the two fibs will be the thin line, and this will be the thick line. So thin line, thick line, thin line, thick line. So this thin line here refers to this fib, which is the 377 EMA, and it actually hits it to the cent. Yeah, obviously I'm always skeptical when people put a lot of lines on a chart, because the more lines you put on a chart, the more likely these lines are to get hit. Yeah, I am very skeptical, and I critically scrutinize anyone who puts a lot of lines on their charts, and I do try to avoid doing that. Now you can see there's a lot of lines here, and the only reason I respect these lines is because they're getting hit to the cent. Yeah, absolutely bang on. Let's just zoom in. There's literally no space between this low here and the EMA. What this means is smart money has said when price hits the 377 EMA, we're going to put a large position on. Yeah, that's essentially what they're clearly looking out for, this line to get hit. If it finished slightly above it, below it, then you can say maybe it's coincidence, but the fact that it hits it bang on should make you reconsider. Again, here, so which line is this? This is the thin green line, so this will be our EMA 987. Now this one, the blue line, thin blue line here, it didn't actually hit it bang on, it's slightly short. As I say, I'm very skeptical when it comes to lines, and I will acknowledge it didn't hit it bang on. However, it's pretty damn close. It's actually, I think when I calculated it, it was around $50 out, which is not much at all. Then look at this. Retest, retest, retest. Yeah? So we were all wondering what was going to happen here. Why didn't it break low? Well, we overlooked this. And I think we can forgive ourselves for overlooking the 2,584 EMA. But yeah, just something to think about there. So these EMA levels, you have to find what is suited to different charts. Yeah, so on different charts you'll find one particular time frame where the EMAs are just hitting the lows each time. So you want to, when you're looking through your altcoins or whatever market you're assessing, just play around with it, stick as many on as you can, and you just got to experiment. It's trial and error. Try different time frames. When a market is trending, you want to look at the more shorter time frames. So I've done the quite high up fibs here, but the fibs start off with you start off with 1, then you've got 2, the next one is 3, then you've got 5, 8, 13, 21, 34, 55, 89, and then you've got 144. Yeah, and these are the next ones. Not so easy to remember. And as I say, I'm pretty sure you won't have seen many people using these levels, but having shown you this, I'm hoping that you will look out for them. So on different charts, different time frames, try and find where price is hitting these lines. As I say, if they're not hitting the lines perfectly, then it's not significant. Yeah. So I'm very skeptical about a lot of lines, and as I say, these lines are getting hit very nicely, which makes them significant. Now, yeah, I'm sharing this with you because a lot of information to take in, you know, applying all these EMAs on different time frames, on different charts. So hopefully you guys will look into it as well, and you can always, you know, mention in the comments if you found anything interesting on different altcoins, if you want me to have a look at those. If you've noticed, you know, some EMAs lining up really nicely on certain time frames on other altcoins, you know, just mention it and we can discuss that. So yeah, this is the most interesting thing I wanted to really mention in this video. I think it's very interesting, and because there's such high fib levels, I'm pretty sure not many people will be discussing them. So, okay, now what you can see is the thin orange line here is the 610, and then 2 fibs below that is the thin green line, the 1597, which then got hit. Yeah, so and then we got the thin blue line. So we're essentially skipping 2 fibs each time. And what's the next one? It's the thin black line. So that is at the that's a 6765 EMA. And look at where it is at the moment. It's at 3700. I'm anticipating it to get hit around this level here, by which time this line is going to keep coming up. And the reason it's going to keep coming up, just remember, an EMA is made up of so the 6765 EMA is made up of the last 6,765 candles. So as time goes on, you gain more candles, but you lose the candles off the tail. Yeah. So so I think it was in February 2016 where this 6765 EMA started, because before that you don't have any data, you know. Okay, you can see the black line started here. Now you can see, look at price here, it's like $440. So as time goes on, these lines are going to be lost from the up-to-date moving average for the 6765, and these are low. So if you take away these low prices, it's going to push the average up, obviously. Yeah. So the thin black line, and in fact all the EMAs, they're going to be moving up naturally, and obviously depending on what price action is doing currently will determine whether price, you know, goes whether the EMA goes up or down. Quite a bit to take in. I will try and do a tutorial at some point on moving averages, but it's going to steadily move up because we're losing those low prices at the beginning of this EMA, which are at around $400. So as we lose those prices that are currently filtered into the average, we're going to see price coming up. And I see it coming up to probably around, if you look at the gradient here, probably around 4,300 by the time I expect this Y wave to finish. So that's another reason for 4,300. As I say, it is, so it could hit the EMA, which, as you can see, it's hitting every other EMA on a fib level since its downtrend. And also this is the 76.4 retracement of Bitcoin since its major high to $20,000. Bitcoin has always retraced at least that amount since when it makes 5 aggressive moves up. Alright, so plenty of food for thought there. I hope it's been of interest. As I say, we've got some volatility coming in over the next 4 days because we've got the CMA, not CME, but the futures close on Friday. Looking for, potentially price could come up to here, could roll over. For that reason, I'm not really trading it. I'm waiting for prices to come down. I want to buy in at low prices. Anything around here, I'm going to be all over, and it's going to be a long-term hold. So even if price comes down to 3,000, 2,000, I don't care. You know, you're never going to catch the bottom in trading. The more you try and catch the bottom, the more money you're going to lose. Simple as that. So you've got to accept that you're never going to catch the bottom. Yeah. So I think getting in at 4,300 is a very nice price to get in at. But regarding altcoins, that's a different story. They're looking bullish. Just because Bitcoin's coming down, the altcoins don't necessarily have to come down. They're starting to dissociate away from Bitcoin. And as we've seen previously, altcoins can pop when Bitcoin is coming down, and it's often in anticipation of the big move up. So before Bitcoin makes its final low, you can expect the altcoins to already be popping. So they're markets that you may want to start looking into. So far they've made some impulse legs up, so that a lot of them are looking like they're due a retracement. A lot of them, if you look on the RSI, looking very overbought. So I wouldn't FOMO in. I wouldn't, worry about missing out. You can let them retrace a little bit. Certainly, as Bitcoin comes up to here, you may actually see them retrace quite a bit. All right, guys, I'm going to leave it there. I hope I've given you some useful things to think about. And as always, if you've enjoyed the content, please like, subscribe, and share. The channel is growing nicely due to all of you guys, so massive thank you for that. Please, if you want to learn more about technical analysis, watch my Elliott Wave tutorials. I've spent some time going through those, making sure that all the information is there. So yeah, alright guys, going to leave it there and take care.